Does it really make much of a difference? Because the candidates we've heard talked about for the Fed, the three opens positions right now, most people think would not go the other way with rates. If anything, they would tighten rates more. So maybe it doesn't make that much difference in the long-term trend for the Fed.
No, I think that's fair. I think the only one we've heard from so far we really know monetary policy views would be Marvin Goodfriend, right? And you're right. He is, I think, leans a little more hawkish. There's some, he's been a backer of negative rates in prior writings. So I think people have sort of run with that. I think it's probably a little bit misleading. I think he's on the hawkish side when it's all said and done. But he doesn't, I don't think he's in any rush to stick a tailor on and go to 3 or 4%, right around the corner either.
Some say Neil Kashkari's having a good audition.
Yes.
He's really trying to put himself out there.
He's running for it. Some people think he's running for it. That's right. So, Jim, to what extent is really the ECB actually driving the ship at this point?
They're driving the ship in terms of that their easing is helping the global markets. Because if you look at interest rates, they all tend to move together. And they all tend to move together in what central banks are doing in aggregate. The U.S. has been holding their balance sheet steady. They've been slowly raising rates. ECB is still continuing to ease, and they're continuing to buy bonds, and that has been a big benefit, I think, to helping depress interest rates like we've seen around the world, especially in the U.S. this week as well.
Jim, something that sort of got my attention and others as well. On the dot plot, the forecast for year-end 2018 is about 2.1%. We kissed 2.1% on a US 10-year. So either, it's a basic question, either the curve is going to be really, really flat or someone's quite wrong. Which one is it?
Well, I'd probably lean on the someone's quite wrong. The market itself, WIRP on your Bloomberg, has got 1.5 maybe rate hikes for between now and the end of the next year. The Fed's got 4. Last year, beginning of 2016, the Fed said, we're going to raise rates 4 times. Stan Fisher said 4 times sounds about right. They raised rates once. So the market is far more dovish than the Fed has been talking right now, and that's not unusual.
Brian, what is typical, though, if you didn't know what was happening in the world and just looked at their forecast, economic forecasts and rate forecasts, it would look like the world hasn't changed in the eyes of the Federal Reserve. Why hasn't the world changed in the eyes of the Federal Reserve?
Well, I think to Jim's point, I think the Fed is behind the curve a little bit, or maybe ahead of the curve, depending on how you want to look at it. But their forecasts repeatedly get ratcheted back. Their economic forecasts on GDP, on unemployment, on inflation. Every other meeting when they roll out these forecasts, they have to revise them. So I think the Fed has just been overly optimistic about the world economy. The Europeans seem to be a little bit more realistic. The markets certainly are more realistic. And then in the long term, the Fed has to catch up to everybody else. So they've really been behind.
So